Okay, great. Seems like we're live. Hello, everyone, and welcome to this another really exciting session by PWiC. This month, we are celebrating Pakistani women entrepreneurs and our male allies who have been doing remarkable work in Pakistan and outside. So today's session is dedicated to go and learn about investments. And I have three panelists um, who may not need any introduction. We'll be having conversations about, how to invest in different startups and what their journey has been. So with that, I think we can introduce the panelists and then we can bring them on stage. So if you don't know, sorry, I forgot to introduce myself. My name is Huma Hamid and I'm the co-founder of PWiC, and I'll be leading and moderating the session with three really amazing panelists. The first one that I would like to introduce, and she needs no introduction. If you're familiar with Pakistani's, startup ecosystem, then Kalsoom Lakhani is a name that everybody should already know about. Kalsoom has been working and helping the whole ecosystem to basically grow since 2011. She's the founder of Invest to Innovate. She's also the co-founder for I2I Ventures, and she's also the general partner for that. So we will have Kalsoom join us, and we will have conversation about investments and startups and what the landscape looks like. Welcome, Kalsoom.
Thanks for having me.
Great. The next that I have on the panel is Asra Nadeem. Asra is the president and also the investor at Draper University. She's based out in California. Remarkable journey, starting from Pakistan, working with different organizations and startups in product growth and startup strategies and product development strategies. She is now leading Draper University, and she's also an investor. I love what she said about don't predict the future, build it, invest in it. And I think that's what we will learn from Asra. Third, I have Shahjahan. Shahjahan he's been part of NIC Karachi for almost 2.5 years. And before that, he was part of Pasha. So Shahjahan has a lot of on-ground knowledge of how startups work and how different investment work. He's also leading a program or a series called Demo 50, which will be picking Pakistan's top 50 startups for investments.
Well,
and it's you cannot hear me, or is it just me? Can you hear me?
Yeah.
Okay.
Yeah.
Shahjahan, you are on mute. Seems like I can hear you. Technical difficulties. So yeah, these audio. Unmute yourself, mute yourself. These are just part of virtual life that we are living in.
It's not a webinar if we're not saying you're on mute.
Exactly. So Shahjahan, I was just introducing you that you are CEO and founder of AssemblyF, and you're also leading this program Demo 50, where you will be picking Pakistan's top 50 startups for investment. So seems like we have a lot of experts, a lot of experience and expertise in one room. So I would try to do justice with this conversation. First thing that I would like to say that the goal behind this conversation was not to provide people like a 101 of investments or 101 on how to do startups. I think a lot of learning material is available online. People can go and read if they're really interested. What I'm really, interested in knowing from this panel is insights into why they decided to invest in startups, because it's from where I see it. I'm working in I come from, I have a very secure job, and I come from the corporate world. So I'm not looking at numbers and money and data all the time. It's somebody else take care of that, right? So why, Kalsoom, you and Asra, you decided to take this journey, and also Shahjahan, and what insights do you use when you're making decisions to invest, or when you are evaluating different startups? So I think that would be the goal of this conversation, and that's what I would like to get from that. So starting with that, Kalsoom, the first question: what is your big why of investing? You've been doing this for almost more than 10 years now, and you have changed the landscape in Pakistan when it comes to helping startups to grow locally and globally. And then like I was looking at the numbers, 47 startups that got out of I2I accelerator program. So what is your why behind this? Why are you passionate about this, your journey as an investor?
Yeah, thank you. Thanks so much for having me. And Asra, it's so nice to share a stage with you and properly meet you. Such an honor. So
same, I'm excited.
I'm excited too. So thanks for having me. I wouldn't say that I changed anything. I've definitely one of many really important players, including Shahjahan in that ecosystem. But I would say that the work in the startup ecosystem in Pakistan over 10 years has been tireless. And so the one thing that I would say from a personal why for me, why I started I2I 10 years ago now, is because I truly believe that the next great innovators aren't just coming from Silicon Valley. They're coming from places like Pakistan and Nigeria and Vietnam, Indonesia, places where it's, there's such big problems to solve. And in the case of Pakistan, when we started, they exist in places where it's really hard to be an entrepreneur, right? So when I started I2I, it was really started with the idea that there's so much potential here that needs to be unleashed, but there needs to be support to unleash that potential. I've only actually been an investor since 2019. So, and it's interesting because I don't think I ever, and maybe this is for me personally a gendered thing, I never put myself in the arena of being an investor. I was always kind of this support behind the scenes, back end player, and a founder myself. And then started to realize more and more as I saw so many young entrepreneurs just be given really onerous terms in the Pakistan startup ecosystem, and just feeling just such a deep sense of injustice, like why this was happening, and seeing so many great companies die for the reasons that they shouldn't be dying, right? Which was that they were being given really bad terms, and just from a scarcity mindset, we're taking them, right? So decided, from the why has stayed the same. It's just shifted into realizing that part of unleashing that potential was also becoming an investor, and also realizing that the lens that I had, I don't come from a traditional finance background. My path to being an investor is not linear, which it sounds like is the same for others on this panel as well. But I've had a very different perspective, as well as an important perspective, just from working with startups for 10 years in the market and just understanding the ground realities. And having been a founder myself, I think there's a lot of empathy that I bring to the table when it comes to working with startups. So the why has stayed the same. It's just my journey has shifted slightly.
Great. Thank you, Kulsum. And I think diversity of experience, that what we also see even in the tech industry, that the more exposure that you get, the more diverse experiences that you get, it also helps you in building the right solution and the right product. So I think that I'll give that a +1. Moving on to Asra. Your journey I was looking at, and I've been, once I've been in the audience when you were one of the panelists a couple of years ago with Open Silicon Valley. Asra, what brought you from Pakistan to Silicon Valley, and what has been your why? Like you started, I saw that you started in a very, very early on in a space with Rosie, PK. So I would like to learn more about how was the experience over there, what your journey looked like, and what brought you to the US, and what has been your big why.
Yeah, I think my biggest why ever since I was young, or like a little girl, was always like, if I have to do it, I have to do it. And that, as I grew up, converted into this quest for freedom of expression, freedom of speech. And one thing I realized very early on is that there is no freedom without financial freedom. And that then led me to technology, which is a great enabler for financial freedom to the masses. And I paid for college through building like an e-commerce business off of MIRC. And it used to be this like chat relay thing. And that to me is the core of what technology can do. And that's kind of what attracted me to what Monas and Rosie were doing. And very quickly, and another thing I learned very early on in life is this concept of compounding. So your money should be making money while you sleep, and your time should be compounding while you're putting. So it should compound without you putting the same amount of effort day in and day out into things. So that kind of very naturally led into this arena of wealth generation for myself, but then also figuring out how I could take that wealth and start investing it in public markets and private markets. So my big why has always been this quest for enabling financial freedom through technology. And the reason and when I'm investing in companies, that's exactly what I look at, is markets or problems or companies where the quality of service is really low, but the price of the service is really high. And that's your education, that's your government, transportation, et cetera, across the board. And to Kalsoom's point, that's where the biggest opportunity in most markets around the world is. It's no longer there. And like US is a very developed market with a lot of, there's tons of opportunity here for innovation, but the change that you can bring with a very small, simple technology in markets like Pakistan or Bangladesh or Latin America is, and nobody's even looking at it. Like there's not a lot of people looking at it, and the local investment scene is so nascent that there's a lot of bad terms floating in the market. So that's where I started investing, and I pretty much just moved to Silicon Valley by accident. I got married, moved to Canada. Like I don't have any like nice fancy story about it. I moved to Canada, did not like it, and I knew Draper because he was one of the investors in Rosie, and I reached out to him, and he said, "Well, I'm starting something. Come down here and check it out." And that's literally how it happened. And I think a lot of people who land into investment or like VC careers here just land in it accidentally. So for me, it was just like years of work that kind of accumulated into this. But even if I'm not working in venture capital, I would still be investing. So that's kind of how I feel about it.
Great. That's the best kind of coincidence or accident that can happen, like that can lead you to do the things that you're really passionate about and where you can feel the impact. Thank you, Asra. Moving on to Shahjahan. So Shahjahan, your journey has been mostly in Pakistan. You have seen a lot of startups from ideation to going, into building companies. So I would like to know what your journey has been and what brought you, in this whole landscape. And right now you're also leading this series of investment with Demo 50. Like, what's your passion behind it? What's your why behind it? Doing all the work that you do.
Yeah, I think why is such a broad question that one can start from 10 different places. The way I see it is that Pakistan is like a prototype for the whole world. The whole world is a developing country essentially, where 3 billion people live in poverty. So Pakistan is again half the population lives in poverty, and if you can solve the issue of well-being for everybody in a country like Pakistan, and which is pretty large, 200 million people is a huge population. If you can solve it if you can figure out something that can impact these people, it can say the same thing can be replicated around the world. I was committed to building, a company. I've now recently moved to Lisbon. I was committed to building a company in Pakistan and growing out of it. And in hindsight, things become more obvious to you. And if I look back over the last 15, 18 years, so Pakistan went through a really bad phase, from 2001 to 2015, especially because of the security situation. And now we can see the reverse impact of that. So now, since we're improving, we can see it more clearly that, our capacity as state also deteriorated, our bureaucrats also deteriorated, our capacity to engage with the world. And this was happening at the same time as the world was moving forward. So the world was globalizing, China was integrating, India was doing business with the rest of the world. And we just felt that maybe, we have maybe a bad image. Pakistan has a bad image problem, but it was really much larger than that. And I think that now that the security situation has improved and things are moving ahead, we can look back and see it more clearly. And what was missing, one key element which was missing in Pakistan was that even if you have a market and even if you have talent, unless you have capital unless you throw capital into that mix, people can't build big, amazing things. They can, do interesting work, but they can't turn that interesting work into world-changing work. Because to change, and there can be exceptions, but it's a question of the ecosystem moving forward and enough people doing it in enough numbers. So even now, I'm committed to the same goal, which is, building the innovation ecosystem in Pakistan and seeing how that can impact, the 100 million people. Only I thought that from my personal journey's perspective, I need to be out of Pakistan to look inside, in the same way that, in hindsight, you see things better. Maybe sometimes you need to step away to, look back and have a better view. And I think that for Pakistan, one term that I've been hearing from people who have come back from Pakistan is Wapistani. And people who are coming back are contributing, and it's really important. But I think there's another term that we need to invent, which is Expotani. We need to send out more Pakistanis around the world. We need to have 1,000 engineers in Lisbon and Munich and Berlin each, and Stockholm and Tokyo and so on. And they should be participating in those ecosystems and then integrating those and becoming Wapistani after that, right? So we've had this term called brain drain. I think brain drain is great. We have too many people. We need to send more of them out, and we need to build those networks with the rest of the world, which is why I'm here, and I'm hoping to pull more people to EU, to the US. I think a lot of people who are outside were telling me, when I joined NIC, I got to engage with a lot of people. They said, there's great opportunity in Pakistan. Everybody should focus on Pakistan. I think that the difference, what they don't realize is that people who are inside Pakistan don't have the networks that they have. And in order to build those networks, they need to move out. So it's both ways. We need to bring Pakistanis who are outside back in, and people who are inside need to go out. And I'm trying to, address this Expotani angle.
That's great. Shahjahan, it's really interesting terms that you mentioned, and we have seen that in PWiC. The reason we were able to scale at 12 global chapters, because once we started in the US, and then we expanded to Pakistan, and then we found out that everywhere in the and wherever there were Pakistanis working in tech, they just started reaching out, and they wanted to have a chapter there, and that was their way of connecting back to Pakistan. That was their way of connecting to the larger community. So I think even though we would love to, some people would love to go back, or some people, would love to come to the US, with this whole virtual setting that we have, and COVID has enabled and accelerated that. I think there is a lot of opportunity that we can definitely tap into. So moving on to the next question, and I would like to, have all of you, give your insights into that. So a lot of community members, PWiC, like we work in the industry, some of us are already in leadership positions. We may have some expertise that we can offer. We may have ideas that we would like to implement and solve certain problems, or we may have capital. Some members may have capital that they would like to invest in building that future. What I would like to know from you is, who can be an investor? What attributes do you need to have to become an investor? And can we inspire PWiC community, especially women who may want to, venture into this? So Kalsoom, I'll start with you, because there's a lot of, it from the outside, it looks like a very intimidating term. Or investor, maybe you need to have a lot of money, you need to have a lot of knowledge of finances and everything. And so I would like to know from you, who can be an investor, and what makes a good investor as well.
Yeah, I mean, I'm starting to come to the realization that a lot of people can be investors, more so than what we originally thought, right? So, I mean, I never thought, to be honest, that this was going to be my path. And then starting to realize, I think what you start to discover is what your lens is that is unique as an investor, but also what you bring to the table that might be different. One thing that I think is great, and what I love, what you just said, Huma, is that I really would love to see more women investing, right? Besides and more women as LPs. I say this as someone, funders fundraising for our fund, I've been actively looking for female LPs because that's also a pathway. Like women who have high net worth, oftentimes we see them put money into philanthropy or charity, but oftentimes don't opt into becoming investors themselves because it seems too, intimidating or overwhelming, or they're told like, even though they have the net worth, that maybe they just are, and there's a lot of like conditioning surrounding that or things that are systemic around that. And I think what's really great is, you can individually invest, which is great. You can be an LP, which is also a great way to learn alongside a fund and do that. And I think that, what's important as an investor, it depends at what stage you're investing. If you're an angel investor and decide to come in early into a company, oftentimes, as everyone on this panel knows, angel investing is like you're very hands-on with the companies, right? So I would actually say, like, what is it that you bring to the table that's different? If you have a really great background in product, you could really help that company grow and scale. And oftentimes even the decisions that you make as an investor early on, it's very gut oriented, right? There's not a lot to go on in terms of decision making. So you're really kind of going off of how you feel about the founder themselves and if they have the vision to do things and go forward and all of that. So yeah, I mean, it's a bit of a generic answer, but yeah, ultimately I think a lot more people than they realize can be an investor these days.
Great. Yep. And the conversation, one of the goals of this conversation is to break that mental barrier that who can be an investor. So I'm really glad to hear, Kalsoom, that there are more people than we think can get into that space. Asra, your thoughts on the question?
Yeah, so I think the most important thing you need in order to be an investor is to understand your own risk appetite. How much of your own monthly income are you willing to lose? And once you set that aside, it just becomes really, really easy. And again, investing in angel investing or investing in startups is not the only way to invest. You don't have to start there. You can start in stock markets, you can start in crypto, you can start in like any other like assets. So there's like different, like you can trade commodities. There are different places that you can start. And there's a concept called fractional investing. So you don't need to like, so for example, in order to buy a Bitcoin, you don't need $60,000. You can put the 100 rupees you have every single month into an investing account. So that's another thing that you can do. Most people have relatives in the US. Just ask one of them to open a trading account for you on Robinhood or somewhere and start putting that like, chunks of that small chunks of money into that. So that's like a great place to start. You don't need that. The other thing is that it's never easy to lose money. And the first time it happens, it's going to be hard. I remember my first investment that I lost was $2,000. It was, in the bigger scheme of things, it was not a lot of money. But the first thought that came into my head was, oh no, I should have bought that Cartier necklace that I wanted. Because that's how it is, right? You always kind of think of it in like this like very linear term. So don't think of it that way. Like just invest it and forget about it for like 10 years. That's how it works. And it's very different from investing in property. That's another thing we have to understand, especially in markets like Pakistan. It's not, you're not investing in a cow. You're not in, that's going to start, giving you milk in like 2 years. You're not buying property that's going to be a plaza or a city in like 3 years. It's not that. That's not how it works. So I think understanding just those basic concepts is easy. And then who can invest? I think anyone who has, my rule of thumb is 20% of my disposable income. So I just put aside 20% of my disposable income, and that's what I invest. And when I was earning 5,000 rupees, my disposable income was very low. Now that I earn more, it's that number, that 20% number hasn't changed. It's gone up on days when I was making more money, and it's gone down on days when I needed to spend elsewhere, but that's been a consistent number. And if you're in the US, then there's a very clear regulation around who can invest. As an accredited investor, you need to either make $300,000 as a family, or for the last 2 years, or 200,000 as an individual, or have 1 million in net worth that does not include your house. So your primary residence. So that's like a very simple gauge for figuring out if you qualify or not. And if you work at any of the FANGs, you most definitely do qualify. And that's it. That's how you start. Like you can start by investing $1,000, $500, 20 rupees. That's kind of how it works.
Great. Asra, I really like that, the diversity of options that you have called out here because especially a lot of female, they do start careers right after, graduating. And that's when, going from just living on pocket money and all of a sudden you're getting a good paycheck. So instead of, just not knowing what to do with that investment and, building your portfolio early on, either through stocks or other kinds of investment that you just call out. It's a great way to build that. And by the time you feel ready that you're ready to take on a bigger investment, that's when you can go. Great. Thank you. Shahjahan, your thoughts on this?
Well, I think I completely agree with us on two things. One is that you should have at least $1 million in your pocket before you start investing in startups, at least. And the other is that
that is not what I said.
I don't think she said that. I think she said the opposite of that.
Right. But I think that the point is that you should put in 20% of your savings into investing, and I genuinely think that people who are just starting off investing should first start investing in stocks before they think of venture capital. I think your first $25,000 that you invest or $2,000 that you're going to invest should not go into a startup. You need to start understanding, how you want to manage your money before you start sharing it, investing it into, high risk ventures. And this is not the perspective of that, whether we need more investment in startups or not. Everybody has to manage their own finances, and I think this is one of the challenges in Pakistan that. And once I've come out, I've realized the opportunities and the way, what were the limiting factors living in Pakistan. So living in Pakistan, what happens is that, Asra was mentioning Bitcoin. So you have to find a relative in the US to open an account in Coinbase. It's really complicated. It's just not worth the hassle sometimes. Similarly, to open a Robinhood account or Revolut account, you can't do it in Pakistan. And then your money is in rupees, which keep devaluating by about 40-50% every 5 years. So you get this hit both in terms of your income as well as into your assets. So you have a property worth $100,000 today, but 6 months later it's worth $70,000. And the same goes for stocks. Whatever stocks, and the stock market is also small. The capital market is not. One of the things that we keep missing out on in terms of understanding what the dynamics of Pakistan is that it's not just that we don't have investment into startups. It's also that the top of the funnel, which is the stock market, where eventually things are going to exit or merge or get acquired, doesn't exist. That's monopolized by a few brokers. It's not fairly organized. It's not regulated properly. Because of which capital formation is not happening. So for Pakistanis living in Pakistan, we keep complaining they invest in property, but I think that they don't have any choice. Now, I mean, again, in hindsight, I can see that I was sitting in Pakistan in 2015-12 and complaining. Every state wants to invest in property, and you can have a 20 crore rupee plot, but you don't want to put 20 crore rupees in a startup. But now it makes sense because where's the exit? How do you structure it? Where's the money coming from? If in 2012 Yusufjahan was investing, he lost most of that. The 2012 investments were mostly lost primarily. So basically, the state was really smart about it, and people like us and Yusufjahan were not as smart in that sense.
But I don't know if he regrets that, to be honest. Maybe
he doesn't. No, I'm sure he doesn't. No, he was doing it more from a different perspective, and I think he's totally probably proud of it and happy about it, and we are all grateful to him for having done that. So that's it's not a negative. What I'm saying is that the way Pakistan is structured even now, 8 years later, I'm saying that maybe the states were right in terms of investing in property. Today, the fact of the matter is that the startups that we're creating in Pakistan are capturing the Pakistani market, but they're being created outside Pakistan. They're going to get acquired by companies outside Pakistan. The money which is going to be spent on them to get acquired is also going to stay out of Pakistan. So it's we're just packaging Pakistani market via a startup which is going to get acquired by Stripe or somebody else, and the money is going to transfer hands outside Pakistan, somewhere in Amsterdam or Delaware, and those Pakistani founders are not going to bring that money into the Pakistani ecosystem as well. So yes, Pakistani founders are going to create wealth for themselves. But whether it's going to address structural issues in Pakistan, I think it'll take another 8 years for us to solve this part of the equation as well.
Right.
Yeah, I don't necessarily agree with that though, because all this wealth that is being created outside of Pakistan is coming back into Pakistan, right? I bring my wealth back to Pakistan. I invest in Pakistani companies. I pay for people in Pakistan. The founders of Careem are doing the same thing. People who got their stock options liquidated through Careem are doing the same thing. They're investing in, they're bringing their money back to Pakistan. Atif Awan has brought a lot of foreign investments into Pakistan. So I think a lot of, yes, initially, because there is no market, like you said, Shahjahan, at the top, the acquisition opportunities are outside, but that's how wealth generation works, right? Silicon Valley, it came from New York. That money came from CIA, FBI, whoever, but then also a lot of that capital market came from New York. And then it started getting invested back into the market. So I think as we see more and more of these exits happening outside of Pakistan, they will come here for sure.
Yeah, and I think a lot of VCs are making sure that companies are putting employee stock options into their companies, right? In the rounds that they're doing, that's factored into the rounds that I've been part of, at least. And so ultimately, the wealth will transfer to people that are working at these companies, and I think we have to look at it from that mindset of abundance, and not just saying that it's going to stay outside of Pakistan.
Great. Seems like we have, it seems like a topic in itself that can take another hour. So I will move the conversation on to the risk and rewards of investment. So when we talk about startups, there are different series that this is an A series startup, this is B series or C, and then there are also people who are looking for pre-seed money. So I would like to decompose all of these different stages of a startup, and then how investment works, and how do you decide at which point you would like to be part of that. Kalsoom?
Yeah, I mean, everyone can weigh in on this. I mean, one thing that I would first say as a starting point is you don't have to raise investment. I feel like there's a lot of this notion that in order for you to be successful, you must raise. And I think the first thing that I'll say is that raise when you have to. Don't raise just because you feel like there's this projection that success is tied to how much funding that you've raised as a company, right? The longer you can go in terms of bootstrapping or generating revenue, all of those things, the better, because you're being put in a better position in terms of power when you finally do go out and raise a round. I think, so the question is, when should an entrepreneur go for investment?
Mm-hmm.
Yeah. So again,
these different stages, and then at what point do you go and look for it?
So what I really think, when you kind of have, obviously if it's a working prototype, if it depends, every company is so different and every sector is so different. So ultimately it's like when you need an injection of capital in order to grow. I think that's really an important point. But I mean, again, it's a pretty general question, and we could break it down in so many ways. But so for me, the major point that I wanted to make to that question was that raise when you have to. And in order for you to be able to raise well, rather than raising from a place of scarcity and that you're going to run out of money, or feeling like you have to do this in order to be seen in a certain light, right? So I think we need to kind of dispel that notion first, but I'll let others weigh in on that.
Great. Yeah, and I was also reading, Kalsoom, that it's if you actually need the money, then go out. There's no set formula for that you always need to go through all the stages. So it varies from startup to startup.
Right. And at the same time, don't go when you literally have 3 months of runway or whatever, right? Like, don't be there's like this little inflection point of like, go when you're comfortable raising, because at least in the Pakistan context, right? So it takes a while for things to close, and it depends on how much runway you have. And I think when COVID hit, our research team did an entire study on what the ecosystem looked like. And the scariest part was how many companies were raising and only had 3 months runway, and COVID hit, right? And so you're just like, crap, you have to really give yourself comfort to know that sometimes it can take a little bit longer, and you want to be in a position of accepting the best terms and not accepting what's on the table because you feel like if you don't, you're going to run out of money, right? So there's a little bit of a balance. I think that's at play there.
Okay, great. Thank you. Asra?
Yeah, so building on to what Kalsoom said, fundraising usually takes 6 months. And to close a round, and just right off the bat, there is no right way to fundraise. Not everybody has the network or the privilege to go out or has friends and family who are going to write $100,000 checks for them. So it's a very different journey for each person. But I always advise my companies to think about fundraising more as a sales process than anything else. Yes, you need the money and you need the capital, but the investors also need you. You're going to go out and figure this out regardless. But as an investor, I need to be in your company in order for my fund or my investments to make money. So go at it from a position of power, regardless of where you are. And that does require a lot of essentially building a funnel. So go at it with a process and a funnel. Don't go at it, to Kalsoom's point, from this position of desperation. So it takes 6 to 8 months to close a round. And the more traction you have, the more proof points you have, the better it is going to be for you, especially when you're pre-seed, seed. There is no formula for valuation. There is no formula for, this is how it's going to work. So it's all about how you negotiate or where your position of power is. And at that stage, things that give you power is your conviction in the problem that you're solving in the market, your customer, your traction. And if you're sitting on this again, this is growth money. If you're sitting on that explosive growth, or you know how to crack it, that also gives you power. So just have, the conviction of going at it from that perspective, and you're selling a part of your company. This is not charity. You're not just giving it out for free. You're getting something in exchange. So don't be scared of asking questions to investors. What do you bring to the table? Who can you connect me with? And if somebody gives you a term sheet, feel free to do a reference check on your investors. I know in Pakistan, there's not a lot of investors, which is why there's not a lot of options. But one thing that remains unexplored is that there is, to Shahjahan's point, there's a huge population of Pakistani engineers and Pakistanis abroad. And to Huma, to your point, you've seen these chapters grow, right? All of these people would be more than happy to put small checks into a round to build that momentum. So reaching out outside of that network, and again, you're building a sales funnel. So the more you have at the top, the more it filters down. So I think a lot of work needs to go into it. And the last point I would like to make is that when you start, even think about fundraising, know how much money you're going to need for the next 2 rounds. So just don't go at it from, I just need to get through this right now. That's not how companies are built. Good companies know how much equity, how much money they're going to raise now, then in a year, then for their Series A. So all of this is stacked on top of each other. And this is your company. This is going to be your life's work for the next 10 years. So don't just go at it from this random, I'm desperate, I need money right now. Think about it beforehand, build that funnel. And again, there is no right way to do it. I know very successful companies who couldn't raise money, who couldn't raise an entire round, unfortunately. And they went out, raised $2,000, $200,000, came back, built something, then went back, then built something. I know companies who raised an entire round in 6 months. So it just depends on where you are in the process, who you know, what your conviction is. But at the same time, it takes a lot of time. So make sure that you're prepared for it.
Great. Thank you, Asra. I put a different question for you. So a lot of people reach out, I have this amazing idea. I really want to go and build a startup on that idea. But what I'm hearing from all of you, it's not just about having an idea. It's about knowing how to pitch that idea, how to, build a business around that idea, how to know your numbers, how to know the sales, the finance, the network. There is a lot that comes with just, beyond ideas. So what's your advice for people who are just, who are just starting, and then they have this idea that they would like to build a business on? And you and I have been, you and I have been doing a lot of these conversations on Clubhouse, where a lot of these aspiring founders, they do come to these sessions and they say, I have an idea and I would like to build a startup. So how do you decompose this statement and say, what do you do with that idea? And with all the investment conversation, what do they need to know to build a successful business out of that idea?
So I think one thing that founders need to understand is to look at the end game. Yeah, where do you want to take this? As Asra said, it's a 10-year journey that you're hopping on. And the second thing is that they need to understand the cap table a lot better than they do when they're raising the pre-seed, seed round. They need to understand in terms of, they need to play it out. What's the end game in 10 years, and how do I get there? And then reverse that structure and say, what I'm going to raise now, which will lead to what, which will lead to what, which will lead to what. So it doesn't have to come true entirely, but you need to have at least broad framework of where you're starting from and where you're going to end. And in that process, you need to understand that you have two customers. One is the customer who's going to use your product, and then there's a customer called the investor. And this investor is also going to evolve. So you're going to have somebody investing in an angel round, and a Series A, B, C, D, and then eventually you're either going to get acquired by some large company, or you're going to get listed in the stock market. And which means they're going to be customers who are going to be putting money into your company because they're going to be betting on your future that's going to be grander and bigger than wherever you are at that moment in time. So at any given moment of time, you have to be thinking about who is the next bunch of investors, my customers, who are going to put money into my company, and what do I need to build in order to achieve that? And in order to get there, what do I need right now? And does this fit into my larger 10-year plan, in which this 100% limited cap table that I've got, as Asra was saying, this is your company, you're building it, which also means that every time you give out equity, is that there's a limited, you have two things which are really limited in life. One is time, which you're investing in your startup, and the other thing is your cap table. There's only 100% shares. They can't be 110% share eventually. So as you give out more shares, so you need to just plan it in a way that it plays out in a good way for you, because for investors, you're one out of probably 30 or 40 investments. But for the founder, this is probably your big thing for the next 5 to 10 years, and you should take it as seriously.
Right. Thank you, Shahjahan. Moving on to the next, I do have a lot of exciting questions, and I'm seeing there is a lot of activity on our Facebook page. What kind of founders an investor should stay away from? Like, you don't want to invest in what makes a founder tick for you, and you really want to go and write a check for that, and what kind of founders you just really want to stay away from?
Should we all go, or?
I mean, whoever like to answer. Question is for the panel, but if you want to ask the question, I'm totally fine.
I'm happy to start as well. Yeah, I mean, it's so personal, right? Like, I think about my partner Misbah and I talk about this a lot, about how similar our founders are to us, and it's not in a bad way, but like there's a mirroring that tends to happen, because ultimately, when you're an early stage investor, we invest at the seed stage, we're getting into a marriage, like we're getting in bed really early with you, like in your journey, right? So we have to really like the founders that we invest in. And I think the traits that I've noticed, and I really love, Asra, you're using the word conviction. I think conviction on our side, we have to have like a lot of conviction in them in terms of them as founders, but they also have to have a ton of conviction into what they're like conviction about what they're building, right? In terms of, do they really believe in it? It's because there's so much glamour around entrepreneurship, and ultimately it's the most unglamorous thing, as we know, and out of anything you could ever do. So are they prepared? Do we really think these are the guys that are going to execute and be in the trenches during the hardest times, right? And I think for me, the traits that I really love in founders, and I've noticed this now having been on the support side as well, about who I click with the most. For me, it's curiosity is like huge, right? Because there's a sense, there's so many things behind curiosity. It's like asking really good questions, knowing what you don't know, taking constructive criticism, but also blocking out the noise and just focusing, because you're going to get a ton of people throwing a lot of things at you, right? So you just have to be able to know, like have a strong compass, but also know what you don't know. And I think for me, that is probably one of the first major things that click with me. But if I looked at, like, we're just closing our fifth company right now, and actually all of our founders, if I looked at all of them, they all have those things in common. And so that's probably a bias that we have. So every VC or every investor, not just VC, is probably very different in what they look for. I know for us, that's what we vibe with, because that's, we get really hands-on with the companies that we're investing in. So I would say that's what I would look for. What I don't look for is probably the opposite. Like, I really, really dislike people that think they know everything, people that don't listen. Yeah, I mean, I'm sure a lot of people don't like that. So that's probably not just us.
Great. Asra?
Yeah, everything that Kalsoom said. And the only exception is I love people who know everything, who think they know everything, because sometimes those are the people who are going to not only challenge you or a market, but also, like, there's a reason, like, the top 10% of the founders or top 10% of the returns come from people that would otherwise be thought of as assholes. So I think for me, yeah, pardon my French, but like, there's no other like nicer way of saying it. So for me, I think a lot of it is just, would I want to pick this guy's phone up or like this woman's phone up in the middle of the night? And would I like, because again, you're in it, especially if you're investing seed, pre-seed, these are the people who are going to, you're actually going to be going to bat for them for the next 8 to 10 years. So it all just comes down to everything that Kalsoom said, plus, do I want to stick with them for that long? I think that's it. There's no magic to it. There's nothing in early stage investing. It's all about how much conviction you have as a investor in a market or in a technology, and how much conviction the founder has. And if that's a match, that's the perfect one.
Shahjahan, briefly, if you can also answer this question, then I'll move on to the next one.
I think I agree with Kalsoom, and I think both Kalsoom and Asra are saying the same thing, just in different ways. I'll explain that. So I like fast learners, and I think fast learning requires some level of humility. And I think assholes can also have humility, because when it's come to the user, they're really focused and zoomed in, and they understand the user, and so they have that empathy for the user. They may be acting like arrogant towards other people, but that doesn't mean that they're not fast learners and they don't have the humility to respond to how the user is behaving. And if they don't, then they'll be out of the market anyway. So yeah.
Right. So moving on to the next question is, what do you value most as an investor? Do you look at the idea? Do you look at the prototype? Do you look at the pitch deck? Or is it the founder and the team itself? Like, when you're making investment decisions and you're, deciding that this is where I would like to invest my time and energy and money, like, what percentage do you give to these things? Like the idea, the vision, strategy, or the team and the product or prototype itself? Kalsoom, we can start with you.
Okay, I just feel bad that I keep going first. Okay, so I think for us, for me, the three things that are probably the most important, and I also know that ultimately we're never going to have all three. If we do, that's great. The first are the founders, and basically are the founders the ones that really we believe can execute on this. The second is these are very specific for me because I'm in VC and I've learned really quickly in VC. It's just such a different game. That's a whole nother conversation. But the second thing is the opportunity, how big it is. How big is that addressable opportunity that they're trying to get to? Because obviously that is a very big VC thing, right? Is like, how big is this? And then the third thing is traction, right? And so how much do they have? Like, how much have they proven? So what I've realized in being a seed stage and sometimes pre-seed investor, I oftentimes can get maybe 2 out of the 3. But if I don't have the founders, we won't go for the deal. So for me, if the founders aren't great, that I know that there's other people that have done it opposite. And what I've also learned in my short time in VC is that there's no right way to do VC. Everyone does it differently. But for us, what I know, what vibes with me personally is that if the founders aren't there, or they're ones that I just feel like aren't strong enough, I won't do the deal. We won't do the deal. But if there's 2 out of the 3, and if the founders are always there, then that's something that we'll consider. Because oftentimes in pre-seed or really early deals, sometimes the traction isn't there, but we can see the path to it because the opportunity is so large and the founding team is so strong. So that's what matters to us, at least at iVentures.
Great.
Yeah, so I'll just break it down. So there's like two buckets that I invest from. So from my angel investments, which is where I'm investing my own money, it's a different valuation criteria. If I genuinely believe in a founder, like I love them as a person, I would invest in them without like, too much conviction. And it's like a much smaller check as well. It's like, so that's a different criteria. Or if I really believe in a market and I find the perfect founder for it, so that's like more founder driven. But if I'm investing from the fund, then how VC funds are structured is that you have to, so let's say it's a $10 million fund, I have to invest in every company thinking that I can return that 10 million to because as a VC, I've also raised money from other people. So just like founders, I've also raised money from somebody, and I have to return that 10 million to them plus the return on top of it. So I have to figure out, okay, if I invest this $100,000 in this company in 8 to 10 years, can this return $10 million plus, can it return $50 million or $60 million to me? Because that's when my fund works. That's where I make money. That's where my LPs make money. And that's where what I'm doing as an investor makes sense. So then the criteria, because of my fiduciary responsibility, changes a bit, and there's more diligence that goes into it. So there's more traction required. There's more like conviction. So that's where how big is the market comes from, because you're looking at where does this return come from? The bigger the check, the bigger the fund you're trying to return. So that's kind of a way to like better understand when investors say how big is the market. That's the only reason. I mean, obviously everybody wants to make a lot of money, but that's like another major reason is that you have to return the fund. So that's kind of what we look at as well is, again, and it's a very simple quality of service is really low and price of service is really high. And that's for us is like the sweet spot. But at the same time, we do look for some initial signs of traction and how big could it potentially get.
Great. And Asra, I'll get back to you on that question between angel investment and VC. I think I got some questions for that from somebody. Shahjahan, if you can also respond to that. Like, you are on mute.
I think both have covered it completely. It's the founder market fit and whether there's traction or not. These are the starting points. And in terms of the market size. So the market size has to be good. Founder market fit has to be there. The founders should be able to execute on the idea, and as much validation in terms of traction as possible. More validation or more traction is always better.
Right. Asra, the question that you mentioned about return on, as an angel investor and as a if you're investing through funds. Actually, somebody asked me this question, like, I do have the capital, I can go and, I would like to invest, but how do I know that what return am I getting? And, if I'm getting anything, like, am I just putting the money away and just forgetting about it? Or is it, there are some checks and balances and rules around, like, I'll get the money back, I'll get some, on top of what I've invested. So would you like to respond to that?
Oh, you're
on mute. If you can unmute yourself.
Yeah. No, if the company makes money, yes, you'll get your money back and then some. But if it doesn't unfortunately work out, then you're going to lose that money. So angels also have the longest runway to wait for their investments, but there's also secondary markets, right? So often at times, if companies doing really well and you're an angel investor, so let's say you were an angel investor in Uber, at Series B, you had an opportunity to sell your shares. And one thing that I really like that Jason Calacanis said was, and he also learned it from somebody else, was how do you get rich as an angel investor? You sell early. In the beginning. So that's the only way, because you need that liquidity in your capital in order to then invest that money more. But when you can hold, and if you're on a rocket ship and you can hold, by all means, hold on to that capital. So there are obviously things in place, but anybody who's thinking about angel investing, I would say do two things. One, start doing fantasy investing, which is what I did a lot of like 10 years ago, which is where I look at deals And obviously I don't waste the founder's time, so I don't talk to the founder, but I write a deal memo. I used to write deal memos, and then I would track all these deals on an Excel sheet in order to learn if this company is actually going to make money or not. And I have all of those memos from like 10, 12 years ago that I wrote with the conviction, and that's how I learned. And then the next step for that, and then as a next step, I started helping early stage companies and started getting advisory shares. So that was even without putting any capital into it. And then the third step was then actually deploying capital. And when it came to that, I just joined syndicates. And if you want to join syndicates, the best way to do it is to go on AngelList. They also accept international investors. So if you are an international investors, just join. There's also, there's tons of syndicates. So join a syndicate. And what then happens is that there's no obligation to invest. But because good syndicate leaders write really good investment memos, you get to learn about how they're thinking about it. So use that as like a crash course on how to think about problems and make better decisions, and then eventually pull the plug and make an investment. So, but in all this process, don't waste the founder's time. If you know that you're not going to invest, don't take a meeting with a founder. Or if you are going to take a meeting for the founder, let them know that you're not investing. But there are these three things that you can help them with. You can help them with hiring, you can help them connect to other people, or you can help them with like a strategy of theirs or something. Just don't waste their time if you're not going to invest money.
Can I, yeah, and I love that advice. It's so great. And one thing, just as something that I'm applying right now to ourselves, but also just any angel too, if you're trying to learn how to invest. This was advice given to me by a friend who's been a mentor, Amir Farha from Becco. Shout out to him. But he actually said, create an anti-portfolio. He's like, what are you saying no to? And also just like have that be your anti-portfolio and track what happens with those companies, right? Because you could be totally wrong and understand like why you said no. So have conviction around, beyond having conviction about why you say yes, why did you say no? But then also you could be wrong with that, right? So follow those companies and see their trajectory. And it's not like you were wrong, you just passed on it, but it'll give you like a deeper sense of like what you're saying yes and no to as well, and just kind of keeping that in your back pocket. So that's been really good advice that I received recently that I'm doing for myself.
Great. Shahjahan, question for you. How do you define the best deal that works both for founders and investors? Like what a really good deal looks like, where both have their needs met?
So, I feel that one is that founders and investors have to separate themselves from the product, which is the startup. And once you start seeing it, and there's a journey to that product. It's going to start now, and it's going to end in 8-10 years once it's get listed or get acquired. And in that journey, what structure would work best for that product? That's what they need to work on. So instead of thinking of me versus you, it's about us coming together. Let's say you're the founder and I'm the investor. It's about us coming together and figuring out that, let's say, and some of the deals that happen in Pakistan, that I'm investing $100,000 and I'm going to take 20% equity. Maybe it seems right to me, or 30% or 40%. So it seems right to me in this moment. But from the perspective of building that product up and selling it to the Series A investors and B and C, we are probably badly structuring it and in the process destroying the value instead of creating it. So as long as both have this long-term view of why we're coming together and what we want to do in the next step, and the next step, and the next step, I think they can come to a fair understanding. Fair would mean something what is best for the value that you're trying to create. Instead of focusing on percentages and shares, I think people should focus on the value that people are going to come together and create, and what is going to maximize that value. Once you have a bigger pie, you can carve it out anyway. It'll still work out for everybody.
That's a great advice. Okay, so I think we are in the last few minutes, so I will ask 2 questions and then we can wrap up. I would like to know from your experiences, like what would you consider your best experience, Kalsoom, and then your worst experience from your investing. Because What I would like to know is the lessons learned or the takeaways. Like, so if you can narrate one of the best experience without taking any names, any any companies, if you don't want to mention, but just your best experience with working with a startup and your worst that you do not want to go back to.
In terms of me as an investor, or just me operating in
Yes.
the startup ecosystem? Okay, so that's a shorter time frame. I don't, worst experience, I never look at anything as like worst and best because I feel like everything is, I know that's a cop-out answer, it's a learning opportunity, but I will say that I received good advice, and if I was hindsight 2020, I think I tend to fall in love with people, and that includes founders. And I think one of my IC members said this to me. She's like, "Don't fall in love with your founders because it clouds your judgment," right? And having been on the support side for so long, it's totally fine to do that on the support side because my money is not at risk. But when I have money into companies, you don't want that to cloud your judgment. So I wouldn't say it's the worst experience, but it was a big learning experience in terms of when things clouded my judgment, because I just really loved the founders, but then it was me feeling for that way personally rather than looking at it from the lens of VC. But it wasn't anything that was necessarily a bad thing, because it was learning, but also it wasn't anything that happened that was necessarily bad. And then best experience, I mean, one thing that I would say is that my career into this, the trajectory that I've had into this space is so not linear. I have a master's degree in conflict resolution, which I thought was going to apply to conflicts in the world and not what I'm doing right now. And it's so interesting. I was talking to one of our potential investees right now because he was like, whoa, you should be like VC diplomacy, because I feel like all the skills that I learned in conflict resolution has come into play in negotiations. And that has been a really fun experience for me, because I think what has been fun for me is learning that what I'm good at is something, and kind of leaning into what I'm good at. So the best experience is realizing that I'm relatively good at, and I'm learning, but relatively good at like negotiations. What I've noticed is that nobody actually says what they actually mean, and I'm pretty good at getting to the heart of it really quickly. I come across kind of like very sweet, but I'm actually very direct. And so sometimes that surprises people, especially in Pakistan. So I think that's actually led to some of my best experiences, and where I've learned the most has been in the process of realizing where I'm best placed. And I think that's been really fun for me to kind of figure out for myself of what my identity is as an investor.
Great. And I can relate to that experience being direct communication, that's a huge difference, the way things, work in both countries. So I can definitely relate to that. Thank you, Kalsoom. Asra, we don't have to say like bad experience, just like Kalsoom mentioned. What's your learning experience and best experience of?
Oh, you don't want to know
as an
bad
investor?
experience?
Sure.
I want to know your bad experience.
So I wouldn't say necessarily, like, again, these are not like life-ending experience, like bad experiences, but things that just like tick me off. One thing that continuously ticks me off is when I put all the effort into closing a deal, and when the founders go out with their PR release and it uses my male partner's name instead of mine. And that happens very frequently, especially in developing markets. And that just like ticks me off the wrong way all the time. And it's like top of my mind because it happened very recently. So that's one thing that completely pisses me off. And then another fun story is I got outbid by somebody who bought a founder a car. So it was a very weird experience, but a local investor, not only gave bad terms, but then also bought them a car, and the founder decided to go with it. So I was like, okay, good. That was a red flag I did not see coming, but it wasn't like necessarily a bad experience. It was just funny, and I like mentioning it as a fun story. And the best experiences I have are so I don't look at investing from a position of power. I think personally, I'm at a point where I don't enjoy managing other people's money, and I don't think I'm going to be raising like the next fund, or I think I can generate the same amount of wealth and the same amount of value by just investing my own money. And that's kind of where I want to stay. And that being said, I think for me, I don't look at it from, because I hold this like money over a founder, I'm better than them. I actually love when my founders are out there building things, and I get to learn from them every quarter on their reports. Like, it's like a little things like, you know, of joy and sparks throughout an otherwise very boring day to day of just like listening to pitches. It's not that pitches are boring, it just gets taxing after a while. And after the same start of this pitch 100th time to you, it's like, okay, thank you. I know I'm not going to invest in it. But that's kind of how I look at it. There's like sparks of joy throughout your day from the founders, or when somebody mentions a product or uses a product. For me, I get very excited when I see somebody using a product I invested in. That for me is just like so much proof of that conviction. And I think that is delightful.
Great. I love your passion. I love your energy, both of you. And Shahjahan, your response to this question.
So I think in generally what ticks me off is people not meeting commitments, you know, broadly. It can be small things, it can be large things, and it raises a red flag for me. I think Asra was very lucky that the founder, you know, took the car and not the money from her, because, you know, it sort of saved you from future agony. And I think the same sort of thing, you know, I look for in people, you know, whether they meet small commitments or not, whether they deliver on their promises or not. So yeah, and from a good perspective, I'm always excited by, you know, interesting ideas, interesting people who are doing, you know, exciting things, and people who love what they're doing. So it's always, you know, fun. Yes, pitches can be boring, but, you know, talking to people who are excited about what they're doing can be very exciting.
Great. I can go on with this conversation. I'm loving the energy. I'm loving the conversation. I love the excitement here, and I'm also looking at all the different you know, questions that are coming in. I would like to have a closing you know, note from all of you. Given that the audience of this, you know, this conversation may be a lot of women working in tech, and Kalsoom, you have already mentioned that you don't get to see a lot of women in investment space, and also even in the, you know, as founders. What would be your advice to the community, especially, you know, a lot of us already work in tech? How can we use that knowledge, that experience to build the future, and how can we invest in that future? Your closing note.
Closing note. So people that are potentially looking to invest, or even just invest their time. I think that for people that are looking at Pakistan or wanting to think about how they're supporting what's happening back there, there's so many amazing founders in Pakistan right now that are coming up. And to what Shahjahan and Asra said, like, I'm just so blown away. And I think one of the biggest privileges I still have as a VC, but having a sister entity that does support, and I'm no longer CEO there, but I get to do a lot of really great coaching. And so just to say that there are so many incredible companies that even if you don't have the wealth to invest right now, that you could be an amazing mentor and leverage your knowledge and expertise that you've built and the networks that you built to support a lot of amazing founders, period. And if female founders too, there's so many that I know right now that we're working with. Yeah. And then if you're looking to start a business, ultimately, like beyond, you know, there's some of this stuff can feel really overwhelming, like thinking about your future rounds and dilution and all of that. But at the end of the day, like it really just boils down to you and this business that you're building, right? And how, who are the customers that you're servicing, and what is the value that you're creating, and really have that at the core of what you're doing and what you're building, because that's what's going to make or break you. It's and yes, all of those other things are super important, but first really kind of hone in on that and make sure that that becomes the nucleus around what you're building things around. So that would be my advice.
Great. Thank you, Kalsoom. Asra?
Yeah, my only advice would be, if you're a female or if you're anybody who's looking to invest, Kalsoom's fundraising, be an LP for her, and she's looking for more females, so join her fund, and that's all you need to do.
I didn't even pay you to say that. Thanks so much.
No, that's exactly how it works, right? If you need somebody, that's what you do. You go out and see. If you don't want to invest yourself, there are amazing women. I only know of Kalsoom from Pakistan, but if you're looking to be an LP in a fund in the US, there's tons of females who are raising funds right now. And if you don't know where to find them, just hit me up and I'll connect you to them. And so that's what you do. You just participate. And on the founder end, if you are if you're a female and you're thinking of starting a company, just know that just because you're a woman, you don't have to tackle women issues. You don't have to tackle like a nonprofit. You don't have to build things that if you care about that, by all means build it. But don't let your gender dictate what you can and can't build. Build what you truly believe in. Build something that's going to get you out of bed for the next 10 years and excite you and make a dent in your life and the world around you. So just that, like, don't let your gender determine, and I've seen that happen a lot in Pakistan, because nobody else is doing it. Because I'm a female and I can go out and raise money, I'll just tackle this issue. And then 4 years down, you're so burned out because that's not what you really wanted to build. So go out and build what you believe in, regardless of how crazy it sounds, and come pitch me in Kalsoom. And even Shahjahan, he has a lot of money, he'll invest.
Great. Shahjahan, your closing note for the community.
So I think Pakistanis around the world should, I've been talking to a lot of Pakistanis over the last 2-3 years, and I've heard a lot of stories, and they keep wanting to contribute in so many ways. I would recommend just one simple way, which is, find one person in Pakistan that you can mentor, do one-on-one mentoring, whether it's with a, engineer, find a girl out of NED University working at a software house. If you're a, software developer somewhere in Silicon Valley, just connect with that one person and help that person figure out their learning journey, their career path, where they need to be at the next step. And the same holds true for a founder. If you want to work with startups, identify 5-10 founders, connect with them, talk to them, find one person that you want to help and work with. And as I think Kalsoom was saying, and Asra also, that use your network, your knowledge, your resources to help that person in their journey. And that's instead of trying to build a new platform, connecting lots of people, if you can just focus on that one person, your contribution will go a long way. And then as from that experience, you can move forward and see how you want to evolve that relationship.
Great. Thank you, Shahjahan, for this great advice. Thank you, Asra, for the for the energy and also for the advice and really diverse perspective, and also Kalsoom. Thank you so much. The takeaway from this is that you need to know what value you can bring to the table. You need to know your passion. You need to know yourself, and where do you think that you can invest? Is it your expertise? Is it your time? Is it your money? There's no set formula for that. And if you're looking for resources, I do want to mention that if you're looking for resources on both like investment, starting a company, and just looking at how the landscape in Pakistan is working, Invest to Innovate. I have been looking at the insights. Kalsoom, I found them so useful and relevant. So I would definitely recommend people going and checking that out. There's a lot of starter kits available that can help you understand what it means to be a startup, and what tools and learning do you need. And just like Asra and Kalsoom and Shahjahan mentioned, if you can not bring money at this point, you can definitely bring mentoring. You can bring your expertise, and feel free to drop a message to PWiC, and we can bring more resources if you're for the community. With that, I would like to close this. I think really exciting conversation, really good discussion. I'm seeing questions coming from the audience, and I think in essence of time, I would recommend that some of these questions can actually be, if you Google them, like what's 3-month runaway mean, you can actually Google it and find out what startup runway means. So with that, thank you, and we will hopefully meet again. And thank you to the panel.
Thank you so much.
Thank you for hosting us.
Bye-bye.